I have a little secret for you today that I think is gonna shock you. VC investors don't care about your $10 million startup, and I'm making this video so that you can understand what I'm talking about. Let me explain. It seems like everywhere that you go, people are looking for investors to put down money for their startup. It's kind of this dream that we've bought into, which is this narrative that it's so easy to build a tech startup. We've all kind of romanticized around this narrative that we see in films or movies like The Social Network, which talks about Facebook's uprise. We see the headlines on TechCrunch or other news outlets talking about how Instagram was sold for $1 billion with only 10 employees with no revenue. Really, stories that make us believe in easy money, and that is a terrible problem. And just for the record, I'm not against VC investors at all. I think that they are essential for a certain type of startup, but I think we should all be promoting a healthier entrepreneurship by talking about the hard work that's required to build out these companies.
Hard work!
And so in believing in these narratives, what we're doing is buying into this easy way out when we all know that entrepreneurship is tough. So let me tell you a little story. When I was running the pre-accelerator program, we had an investor who came in to talk about fundraising 101. He was in fact the general partner of a VC firm that's focused on investing in healthcare startups here in Los Angeles area. And so he got up there and did an amazing presentation in front of everyone, super informative. But when he was up there, he said something that shook everyone in the room. He said that VC investors were not interested in investing in companies that would stay at $10 million in annual recurring revenue. And by the way, he was an amazing guy, and he was really just saying this to make people understand that VC is not for everyone. And in this video, I'm going to break it down so you can understand what's behind that statement. So the first step here is let's talk about what a VC actually is and what their goal is as an investment firm. So VC or venture capital firms are actually investment firms that take money from LPs who are limited partners and promise them returns on their investment. So these LPs or limited partners could be investing in all types of assets. And in this case, they're trusting another company to make investments in the tech industry for them. So examples of LPs could be university endowments, they could be public pensions, sovereign wealth funds, they could be high net worth individuals, family offices, you name it. Now, the way that these VC funds get paid is on two fronts. The first one is a management fee. So they essentially make between 2 and 2.5% of the funds that they're deploying, which means the amount of money that they've raised that they're going to be investing in other companies. And that pretty much covers for their overhead, their time, and it's considered to be pretty standard throughout VC. On top of that, they make something called carried interest. Now this, think of it like a success bonus. So on the returns that they've made, on the profit that they've made for investors who invested in the company, they will take between 20 and 30% of the profits. So that's a huge incentive for them to have successful startup investments who are going to yield large returns. But let's look a little bit into this business model, VC. We're talking about a market where 90% of new startups fail. So as a VC, you understand that one of those companies has to pretty much pay for all of the other losses that you may have had. Now keep in mind that 67% of founders who raise capital from venture capital investors either fail or kind of just self-sustain. So essentially, investors are really betting on the success of very few startups to be able to make the money they need to make to be able to create profit for the investors, which is their job. So the mentality is kind of go big or go home. It's all or nothing. We have to grow your company to be able to yield massive returns. If not, we can't pay and we cannot do the job that we've promised to our investors, which is their primary objective. And usually the returns have to be pretty large. So they're really only interested in $100 million plus exits. And usually they're targeting $1 billion exits from those really, really high growth companies. And then we have the liquidity problem, which is essentially that when you're investing in these high growth startups, your money is tied up for a long time between the moment you invest and the moment that you exit or reach a liquidity event, which means that you cash out. So investors usually do it over a 2 to 4 year period, but then they have money tied up for 7 to 10 years. In fact, data from Correlation Ventures is now saying that 65% of VC investments do not return the capital. So this is the capital invested. And only 4% of these rounds bring back 10-time returns. So 10 times the money you put in. But studies are now showing that it usually takes between 12 and 14 years for that money to become liquid or to become cash again. So for a company who essentially is able to self-sustain, let's say they grow all the way up to about $10 million in revenue, but they're not able to grow to a point at which they will exit for $100 million or more, 200, 300, usually even $1 billion, then that means that they're in a position where they become a liability to the investment company, to the investors. So they would essentially rather have your company fail and be able to deduct that from their taxes, or have you exit for $300 million. So $10 million, $20 million companies for them are not in their interest. They don't accomplish any goals for them. And so it's totally shocking, but the good thing is that this is the truth. And now let's quickly come back to founders, right? What do most founders really crave? Having spoken to quite a few of them, I think one of the big things is kind of being able to work for yourself. So this idea of being your own boss, the freedom of being able to work when you want. Two things that you will not get if you're raising venture capital money, which is fine, but you just have to understand that the priority is to scale ultra fast and go super quickly. And oftentimes there's also the idea of owning ownership in your company. So you're always giving up ownership when you're taking on investment. I have chosen to build businesses fully bootstrapped for some of them. Others I've raised money for. I know that there's value in all things. And I think the most important is for founders to be able to be informed, make decisions that are in line with their beliefs or what they're looking for from their business. That'll be a good start. In fact, many of these are not mutually exclusive as well, right? And the amazing thing is that we have so many more options these days because we have all types of alternative mechanisms to get the capital we need to grow. VC is one of them, but I think it's important for everyone to understand the implications of taking on money from different profiles. Also understand that VC has a very aggressive style because of the models that they have. So they're not being mean to you when they don't want to talk to you. It may just not be the right fit in terms of capital and expectation, and that's totally fine. So make sure to look into it and make decisions based on information. And by the way, I'm a huge fan of people who build businesses from the ground up, own 100% of them, and also are able to live that freedom that they're craving. You're always going to have to work when you're building a business. So the real question is just if you're doing it for yourself or for a boss. $10 million businesses, come on. Everyone's looking to have a $10 million business that they own 100% or with a partner 50% of. Overall, having ownership in assets and things is what can make you the most money, or at least build the most wealth. Thanks for the watch. Thanks for the subscribe. Thank you for the like. Really appreciate it. If you have any questions or you want me to shoot a video about any random stuff, post it in the comment section. I would be so stoked to hear from you. This is the beginning of a very exciting revolution.